I'm about to take you guys through a trade recap, a trade I literally just took about 2 hours ago, and you're gonna get a lot of value out of this. This trade is the perfect example of why you can't have emotions or opinions in your trading. When I got to my desk this morning, I went through the usual pairs that I watch every single day. GBPAUD was screaming for a long position based on my trading plan and how I've backtested it in my rules. As I got to the desk and I did my technical analysis, GBPAUD, it just didn't make sense going long. And we'll jump into the chart right now and I'll show you my thought process and explain why having your opinions and emotions have no place in trading. So looking at GBPAUD, the technical analysis were very short bias, but based on my plan, my entry signal presented. So you got bearish divergence over here, which means price could chop, it could reverse, and that's just a bearish signal. We are trading towards the 800 EMA. It's counter trend move. It doesn't make sense to go long, especially when you have the 800 EMA right there. You have a ton of pins kind of coming up to the 800 EMA in this price sensitivity zone, which means price may kind of stall at that point. I'll get to more on that in a minute. The higher time frames, so the 1 hour, there was a massive resistance zone up here. Price is bearish on the 1 hour. On the 4 hour, price is bearish, and on the daily, price is bearish. So when I came back to the 15-minute and analyzed the 15-minute chart, like I said, with the bearish divergence and the pins, it makes sense logically when, as traders, we do our technical analysis and try and gauge what's happening in the market. It's up to us, and I'm not big on predicting or forecasting what may happen. I'm big on reacting to what is happening. If I was to sit here and analyze this chart and say, look, I can only get, 0.5 R to the 800 EMA, it makes perfectly good sense to kind of, if you're reacting to the price chart, to kind of maybe downgrade the grade of the trade, avoid it and whatnot. But having a systematic approach based on my back testing over 800 trades of this exact same signal, the ASFX A1 signal, I needed to pull the trigger on this trade, because at the end of the day, the biggest takeaway about this trade and what I'm trying to tell you guys is we don't know what's going to happen in the market. The uncertainty in the financial market is what kind of hurts a lot of struggling traders or new traders become successful. We don't know what's going to happen. And for me to sit here and kind of say, look, price may stall at this resistance zone, so I'm going to avoid this trade. That is based on not having enough data and knowing what may happen. With the testing I've done and order back testing, I know that there is a 62% chance that taking these entries are going to hit 2R, my 2R take profit. And that is why I am fully out of my trades at 2R, because I know the probabilities of that happening are much higher of it not happening. So it makes sense to do that. With a systematic approach, we never know what trades are going to be winners and we never know what trades are going to be losers. So then comes in consistency. We need to be consistent in what trades we take. That's why I have a perfect balance of, taking enough trades to make it worth my while sitting here for 3 hours every single day. And also a balance of being selective, so I'm not taking way too many trades and over trading. So I have found the perfect balance in my trading, but most importantly, I've removed so many gray areas and subjectivity in what I need to do. So when situations like this happen where I do my technical analysis, yes, we know as traders from chart time and back testing and just market dynamics that support zones are respected, resistance zones are respected. So for us, we can react to that. But for me to predict that price is going to hit this resistance zone and come straight back down, that's not for me to tell. And that is the complete opposite of what we need to do as traders. If I was to have that mentality and be like, oh, price is going to hit the 800 EMA and just bounce right off and come down, I would have missed out on this perfectly good trading opportunity because of my opinion. I didn't know it was going to happen. I assumed it would. And as traders, we can't do that. So having a systematic approach, yes, you can be discretionary traders and there's so many ways to go about it, but that all comes with experience. If you are a struggling trader, if you are a new trader, having a systematic approach, just like a robot, like I am, is the best way to kind of start making yourself successful. because you know exactly where you're getting in. So what's your trigger in the market? You know, is it an entry candle, a candle formation, a break of a certain EMA or whatever it is? You got to know where you're putting your stop loss and where you're taking targets. That's usually not enough having a profitable system, because there are thousands of systems out there that are profitable. What really makes the difference is doing the back testing and knowing the data and knowing the probabilities of what may happen next. That removes the outcome of humans knowing what needs to happen next. We feel like we need to have control. We feel like, you know, we need to know what's going to happen. As traders, we simply don't. So having the probabilities, having the data to tell us what may happen makes it so much easier to be executing trades with a small account, a large account, no matter what size account you're trading with. It removes a lot of the outcome focus, and so you can just focus on the process of being a great trader. So having that systematic approach is key. Once again, we never know what trades are going to be winners or losers. We simply have to play the probabilities. We can't pick and choose. That's why it's so important to have a very strict, rules-based, defined approach. And in turn, with the confidence of backtesting, the confidence of risk and money management, they're all the kind of little aspects and, you know, bits and pieces you need to make a profitable system. And most importantly, it all comes up to here. Being outcome focused, and this is just kind of like a psychological hit kind of tip for everyone. Being outcome focused would have made me avoid this trade, because I wouldn't have wanted to lose money. And as humans, we don't like losing money, especially as traders. So if I can avoid losing money, which isn't such a bad thing, I would have avoided this setup. But at the same time, it would have also avoided me making money. So it's a double-edged sword scenario, and that's why it's so important that you guys need to be following I can't preach this enough, a rules-based system. Know when you get in, know where you put your stop loss, and know where you take targets. Even still having, like I said before, having that kind of approach, we're still going to make mistakes, and especially if we can't master our psychology, our emotions, and our opinions, even if we get really good at executing on the trades and pulling the trigger on our signals, we may be more outcome focused because we go up in profit. So once we're up, 1%, we may stuff up our trade management, and that will just jeopardize our rate of return. So I hope you guys got some value out of this video. Once again, don't be so outcome focused, and just focus on the process.